Hi guys, welcome. Adobe is another solid technology company that has been producing bumper profits year after year. They specialize in software for content creation and document management such as Photoshop and as well as Illustrator for graphics design. One of the reasons I like software companies is the inherent nature of software as they can be reproduced quickly and at a fraction of the cost, unlike chip makers that need expensive manufacturing facilities to produce their chipsets and complex supply chain to deliver their products. On top of that, the recent burst of activity in video, photo, and digital art publishing in the social media circles has created a huge demand for Adobe solutions such as Photoshop. In this video, I'll be diving into the financials and the technical charts to answer these three questions. Is Adobe worth investing in? Is it a buy or a sell at the current price? And whether Adobe is trending up or down from the technical charts. So let's jump into it. The revenue has been growing steadily from $2.6 billion achieved in Q1 of 2019 to $3.9 billion in the most recent quarter. The revenue growth can be seen clearly from this line chart that shows the year-over-year revenue growth. It is the percentage increase in revenue from the same quarter from the previous year. The year-on-year revenue growth from Q2 of 2020 is at 26%, and the lowest year-on-year revenue growth was 13% in Q3 of 2020. Adobe is still a growth company with more potential upside. Since software companies can reproduce their software easily at a very low cost, the cost of revenue is just $447 million for the most recent quarter, against a revenue of $3.9 billion. I'm already getting a very good vibe with this stock. I think the rest of the numbers are going to be really solid. As expected, the gross profit is superb at $3.4 billion. Adobe's gross margin comes in about 88%. I think Adobe has one of the highest gross margins at this level. I'm quite surprised to find that the biggest operating cost component is selling and marketing at slightly above $1 billion. Research and development is $620 million. I was expecting to see a bigger research and development cost to selling and marketing. Also, interestingly, general and admin is just $290 million. This includes employees' pay as well as management's pay. It looks like Adobe is a company that is well run and not one where the management is enriching itself. But we'll take a look at the stock-based compensation later before coming to that conclusion. The net income is again solid and has doubled from $674 million in Q1 of 2019 to $1.26 billion in the most recent quarter. There was a one-time tax benefit in the previous quarter that attributed to this big jump in Q4 of 2020. The earnings per share for this quarter is at $2.61. The trailing earnings per share of the last 4 quarters is $11.48. The trailing earnings per share is a proxy for the yearly earnings per share. The operating cash flow has been growing as well. Adobe acquired Workfront, a web-based project management software company, for $1.5 billion. While the operational cash flow is growing and positive, there is a steady cash outflow in financing activities. But it is for a good reason. It is for stock repurchase. I really like companies that buys back its own shares. The Adobe story keeps getting better. Adobe's cash position is healthy and is getting stronger and stronger. It has grown from $1.6 billion in Q1 of 2019 to $3.4 billion in the most recent quarter. The quick ratio is below the ideal level of 1 but is improving. If it were not for the Workfront acquisition, it would have reached above 1. Overall, Adobe's balance sheet has remained healthy with the total assets growing while the total liabilities has remained largely flat. The bulk of Adobe's assets are in Goodwill. It accounts for almost 50% of its total assets. Usually, technology companies have a high percentage of goodwill in the form of patents. They form the value that the company brings to the market and gives them the edge to capture market share and command high margins for their products. This is evident from the profit margin and cash flow of Adobe. Their debt level is about 32% of total assets. This is one of my favorite charts that shows how profits could easily turn to losses in the form of interest expenses due to high debt levels. Adobe's interest expense is just $30 million compared to a net income of $1.2 billion, a mere 2.3% of net income. The book value per share is at $28 currently and has been growing from $20 in Q1 of 2019. The book value measures the net asset value, which is total assets minus the total liabilities on a per share basis. At the current price of $483, Adobe is trading at a multiple of 16 times price to book. Value investors look for companies with price to book below 5. The PE to growth ratio is at 1.4 currently and was at 4.7 the previous quarter. The PEG ratio measures the PE in terms of year-over-year revenue growth that I explained in the earlier part of this video. Adobe's stock price has gone up from $345 in Q1 of 2020 to $483 currently. At the same time, the rate of revenue growth has been between 13% to 26% in the most recent quarters. A PEG ratio of 1 indicates that the price is increasing at the same rate as the revenue growth. A ratio above 1 is when the price has gone up too fast and is not supported by revenue growth. Undervalued growth stocks have a PEG ratio below 1. Let's take a look at the technical analysis. Adobe's share price has accelerated sharply in a parabolic rise. I am not a fan of chasing after parabolic rises as it can come crashing down in no time. There is not much more to be gained from the current price. The risk reward is not in favor of going long on this one. So, is Adobe worth investing in? It is certainly a fantastic stock. It is one of the best stocks I've covered recently. It is comparable to the top 5G stocks such as Qualcomm and Skyworks Solutions. It has a history of consistent profits, high profit margins, and is still growing. It also has a strong balance sheet. Is it worth it at current prices? The valuation of 15 price to book is a bit too high. The PE ratio is quite normal at around 40 and the PEG ratio is near to 1, just slightly overvalued. Technically, the price has risen too sharply and does not provide a good risk reward. I'll watch Adobe very closely for any dips below 400, but I doubt it will come anytime soon. Subscribe to my channel if you have found this sharing useful and hit that notification bell so that you don't miss out on any of my future videos. And I'll see you soon in the next one.